Hey, in this video, we're going to review Chipotle. So when we do a stock review at Tykr, we like to use the 4M analysis. We use Tykr for the first M, that's the margin of safety or MOS. That's the math. Those are the numbers around investing. We always tell people to start with the numbers, but you have to look past the numbers. You have to look at the business. There's a little more to investing in, and we're going to go through that a little bit with this example today. So what we'll be doing is, of course, the MOS we'll start with, then we'll do the meaning, moat, and management. This will give you an overall view of what Chipotle is from an investment standpoint, and if it's a wise investment or a stock you should probably put on your watch list and maybe continue looking for other stocks. But anyway, let's go ahead and dive in. So when you log into Tykr, right away you can see that Chipotle has a on-sale summary. This is really good. Their score is 16 out of 20, which is fantastic, and the margin of safety is 80%. Margin of safety being the discount off the sticker price, or otherwise known as the fair value. In this case, it can be perceived that this stock has a high price, $1,400. But if you look here, that sticker price is at $7,300, which shows a lot of upside potential. If you're interested to learn how we calculate that sticker price, you can simply go to tykr.com. Under our education section, we do list all the calculations, so you can go create your own version of Tykr if you really wanted. Of course, this will save you a lot of time. So let's take a little closer look at why these numbers are the way they are. What Tykr does is it analyzes the financial statements over the last 5 years. It looks at the income statement, cash flow statement, and balance sheets. If you're good at reading these financial statements on your own, you can certainly do that. We're going to summarize what it really looks at. So in the income statement, it looks at the revenue, net income, which is your profit, and then your earnings per share, which is related to profits as well. And what you wanted to look at is a nice steady increase year over year. In this case, Chipotle is showing exactly that. In fact, their net income, their profit, their most recent year is looking outstanding. With EPS, same thing, outstanding the most recent year. Now, EPS, this is the most important metric of with any stock. What happens is every quarter the financial reports come out, and what analysts and investors and institutions are looking for is an increase in the EPS. Typically, when you see an increase, you'll see the share price continue going up. And of course, if they miss their expectations that EPS is lower, that stock will go down. Right now, as we're recording this video, which is March 15th, the market is super volatile, and some of you hold some great stocks, and the earnings report will come out. EPS will be greater than expectations, but the stock still falls. Don't worry about that. That's just the fears in the market as we speak. Just continue buying those great businesses, buying those shares, because you're holding for the long term. We'll continue here to the cash flow statement. The cash flow is looking really good. You can see the most recent years, a nice jump as well. With the assets, we also are seeing a consistent increase over time, which is great. And then with the equity, the same thing, we're seeing an increase. With the liabilities and debts, we want to see those increase, but we do understand that they may increase a little bit, especially with a business like this, because restaurants have really high costs. You have the real estate, you have employees, and you have food are really the few of the key factors that contribute to high liabilities. This equates to lower profit margins. Restaurants, as some of you know, especially some of you who've tried to start a restaurant business, it's a tough business to build and sustain. I think the average lifespan of a restaurant is, I did make a comment within the recent article here. 90% of restaurants fail in the first year. It's one of the hardest business models to start. And I think it's just a few years, you can potentially keep it open, but it is hard because those profits, they are pretty low because of, again, those high costs. But overall, the financials of this business are looking really strong. If we do a quick comparison, which we will in a little bit, you'll see how this business model looks from a financial standpoint against like McDonald's and Taco Bell and so on and so forth. But just hang on a second. What I'd like to do is quickly talk about the meaning. Let's move to this part of the analysis. So with Chipotle, they are not a franchise business model like McDonald's. McDonald's, what they do is they set up franchises, or somebody can become a franchisee by opening a location. And what that does is it puts the risk on the franchisee. They have to go to a bank. It could be anyone from like you or I. We can go to the bank, get a loan. We got to find real estate, of course, that's approved by McDonald's or any of these other chains. And then what we do is we would share the profits with the corporate, with McDonald's. Chipotle doesn't do that. They carry the risk. So they start each location with their own money. They've got great free cash flow. So they're taking on that risk, which of course is a little risky if that location does not do well. But on the flip side of that coin, they make more money. They make more profit there. So that's a really good part of the business model. And it's not easy. You know, they've done this since the beginning. I read about the history is they did take out some loans, but they did self-fund. In other words, the revenues from one location, they would use those profits instead of paying themselves like large salaries, which you do see this with some corporations, is they take these exorbitant salaries and pay themselves because they need these bonuses. In this case, I really appreciate how they ran this business. They take those profits and go start another location. And they do this over and over and over. That's a really smart play from a restaurant standpoint. Another thing to keep in mind too is I did read about the technology used for Chipotle. They've done a fantastic job being like a market leader, it looks like, especially during the pandemic. With COVID, the ability to order online and pick up curbside was extremely efficient. And it looks like their CTO talks about the investment they put into tech to streamline not only the way they sell, but their operations as well. That's a great sign, especially over the coming years, is if you can leverage tech, especially in the food industry, that's a great place to be. So, you know, there's our second M from the meaning standpoint. We've checked that box too, looking really good. Now let's talk about the moat. So here's a quick comparison. We know there are 3,000 locations around the globe, approximately right now as we speak, with Chipotle. McDonald's, they've been around a little longer. They've got about 38,000, but look at their numbers. They got a 15 out of 20. The overall financials are decent, but that margin of safety is only 1%. So there's not a lot of upside potential there. We jump down to the Apollo Global Management, APO it's called. Nobody knows who they are, but they own Qdoba, Chuck E. Cheese, the Fresh Market. Probably in the list there, Qdoba is probably the biggest competitor to Chipotle. If you look down below, there are about 700 Qdoba locations compared to that 3,000. And, Chuck E. Cheese, 612, and then you've got the Fresh Market at 159. So overall, you look at the financials, 12 out of 20, still decent. Margin of safety, 32%. So some upside potential there, which is great. But in this case, Chipotle is still the winner. So there's another one. And then another company you've got here, you have Yum Brands, which owns KFC, Pizza Hut, and Taco Bell. And in this case, financials are still looking good, 12 out of 20. But again, that margin of safety in this case is 1%. So not a lot of upside potential. In this case, of the competition, Chipotle definitely outshines. It is the stronger stock in this list. Now, when we get to the management side, this can be a little tough for people to land on what's a good manager, what's a good CEO. And what I do is I put a lot of emphasis on past business experience. You can't just take somebody off the street and put them into a leadership position. I kind of look at it like, let's say you're a GM for a sports team, like here in the US, American football. If you're a GM and you're looking for a new quarterback, are you going to go to the local high school where, some kid doesn't have a lot of experience? You're going to look for somebody that has experience winning championship games and winning Super Bowls. In this case, you want to look at the CEO the same way. What have they done in the past? What kind of businesses have they built? How have those businesses performed? So right now, with the management, we've got Brian Nickel. He's been the CEO since 2018. Prior to Chipotle, He worked at Taco Bell as CEO as well as Chief Marketing and Innovation Officer. He also served as president at multiple and had multiple roles at looks like Pizza Hut, where he was in GM position as well as CMO. So I'm seeing that CMO, that Chief Marketing Officer position twice, two different companies. That's a great sign. We want to see that. He's got a strong emphasis on marketing. He's also worked at some bigger businesses in the past. As I scroll down, I can see he also has some pretty impressive awards. Some of them include Fortune Business Person of the Year, 2019, Bloomberg's People Who Defined 2019, Eating Well's American Food Heroes Award in 2021. He was listed as one of the best CEOs of 2019. So the list goes on here. There's a lot of good awards. Overall, Brian Niccol is a great CEO for this company. He seems to be doing a great job. He also has a lot of great experience, especially I do like that previous experience at Taco Bell and Pizza Hut, especially in some of those roles, including CMO. He's got a strong emphasis on marketing. Now, something to pay attention to this stock that we did not previously touch on is some issues that happened in the past. So 2015, there was an E. coli breakout that it affected a lot of locations around the US. And their stock, I did make a note here, it went from 700 down to 250 over the course of 3 years. Quite a painful duration for investors, but they really made a big turnaround in 2018 to 2020. The share price went from 250 up to 920. That was a 268% return. So it was painful at the time, but they made a really solid turnaround. And since that time, the CEO at the time did step down, and they brought in the new leader, Brian Niccol, soon thereafter. That's usually a good play. Like when there's a lot of big issues in a company and you want to get a fresh start, the board of directors will look at bringing in a new CEO. They'll tell the current one to step down or maybe step away from the business. We've seen that with a lot of businesses through the years, like Uber, for example. There's a lot of issues going on in that company. Same with WeWork. And a way to turn the ship around is remove that leader, get somebody else in. It kind of gives a new breath of fresh air in the business. In this case, the board really made a wise choice with Brian Niccol. So I'm impressed with the move. I do like his past experience. That does bode well in the business. And I think, when you look at all four M's, you get the margin of safety. Just to summarize here, margin of safety is looking really good. Financials are better than all the competitors. The business model, it's like, I don't think people are going to get sick of burritos in the next 10 years, right? But as far as the business running the way it is, it owns the real estate locations, it maximizes the profit at each location, and then they are big on tech. I think that's an excellent model and strategy they're running. The Moat we touched on a little bit, they are highly competitive in this space in the restaurant industry. And then with management, I think they're doing a great job. So overall, with Chipotle, I think they're a strong stock. And if you want to diversify your portfolio a little bit with something that's maybe not like my portfolio, which is primarily tech, if you want to kind of mix it up a little bit, this stock is definitely worth a look.